16 November 2023, Thursday, MAO with Cal once again. Now, gold should be heading towards the 2218 target. All right, of course, it has to be adjusted because this is my target 2 years ago, and I'm still calling on it because I believe that gold will test this number. And in fact, itself, it could be even higher by April 2024 because Federal Reserve likely to cut rate by March 2024. So more detail coming up. Let's go. Right, before we go into that, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, the thing is this, let's just go back to numbers again. So the core CPI data on Tuesday came out 0.2%, while the CPI year-on-year came out 3.2%. So it's basically lowering down, as you can see on the screen right here. So what is happening? Well, apparently it's all right. Some prices, some certain part of the inflation numbers are actually coming down, and we have an incredible retail sale on Wednesday, positive, and the PPI went down instead. So all these are very good numbers if you'd ask me. But of course, again, with the economy not doing well, this number come from where? Of course, there's many ways to explain this, but I'm going to just skip this for today. But very important tonight, we have the initial jobless claim. And of course, if this number goes a bit higher, I think the market will continue to go higher because the market now is building on a negative market. That's why this is something very different right now. So the thing is this, with the US inflation broadly slowing down, erasing bets that more rate hike is coming in. So basically with that, right, the market are pulling forward now to believe that the Fed will cut the rates very soon. So from the CPI data, we are going back to where we came from at this 2021, that time in June. So the thing is this is why the market is very happy right now. Okay, so with all this thing ongoing right now, what is the next thing to expect for? Right, you can see from here itself, fuel prices has came down, and we also saw that used car and trucks have came down too. And of course, shelter price is still there, it's still the one holding it. But overall, the numbers are already coming down a bit, yeah? So that is the reason why. But of course, if energy prices do rebound, because we all know that energy prices came down recently, right? So if the energy prices do go up again, this will again cause some issue. But again, I believe that right now they are doing a little best to make sure the numbers stay low. So Nick, right, the mouthpiece of Federal Reserve, basically came in and says that, right, now actually the whole thing here, last 5 months, the annualized rate itself is 2.4%. Okay, so think about this right now. That isn't what the Federal Reserve wants. So that's the reason why the Wall Street guys are looking at this. They are looking at, right, there'll be no rate cut. No rate hike. Sorry, my bad. In December, no rate hike. Okay, apparently. And in fact, it's right by March, the 20th of March, right, there's a 31% looking at there will be a rate cut instead. So by next year, March itself, there could be a rate cut. Now, I know that a lot of people says that, okay, guys, this is something that, is it possible? With the inflation that's priced now, what can we expect, right? But I say again, the economy can't take it anymore because why? Credit card now. The credit card delinquencies are rising very fast right now. It's the highest level since 1991. So you think about this, the Federal Reserve cannot allow this to continue. So they need to pull back the rates. If not itself, right, more and more people will default, and that will be worse than the 2008 financial crisis. And in fact, itself, right, when they start to lower down the rate, obviously the 10-year, the 20-year, the 30-year will start to basically slide, right? The yield will slide, and that will push back this inversion curve back to where the zero mark. And of course, we have seen this before. When they do that, right, every time they do that, we can see that the market will basically goes into recession. So if they really want to avoid recession, which is not very possible because this has been quite a standalone indicator, that means that the Federal Reserve do know that something is not going right for the economy. Hence, therefore, right, there is a possibility of a recession coming in. So if they are looking at a mild recession or a soft landing, then of course, that will be good because if the market can just accept it, a short technical recession by April next year, then the market may actually pull back a little bit, but that will give a very good, catalyst to one particular market, which today the topic is on gold. So in fact, it's all right. Central bank has still been buying a lot of gold. In fact, they've been buying into August, and this September. Basically, they bought 77 tons of gold to global reserve in August itself. And of course, Singapore, the central bank, we have bought so much gold that we are ranked the third largest gold buyer from January to September this year. Oh my God, a country like Singapore buying so much gold. So in fact, it's all right. We are just behind the Bank of China, which is the largest buyer, obviously, and after that, and Poland, in fact. So think about this right now. For why are we buying gold? So that must be a good reason. And of course, if our guys are buying, we should be buying too, right? So the thing is this right now, you can see that the central bank's demanding for gold is really increasing, as we can see right here. So that is the reason why we're confident that gold will go up next year. But of course, again, that is the fundamental. So what's the technical on that? Well, very simple, guys. Think about this right now. The Federal Reserve, if they have to cut rate, which I think you agree, they have to do that. What will happen to the US dollar? The US dollar will come down. So if the US dollar comes down, what will happen to gold price? Well, we can see that over the time period, when US dollar goes down, gold prices go up, right? US dollar goes down, gold prices go up. Pretty simple, right? Now that is what is the last 12 months to last 18 months. But what if we go back into way back, okay? Take a look. Since 1999, we've seen this happening before. It's not the first time. So you can see right here now, in this moment, you can see that when the dollar was basically coming down, all right? The dollar was coming down, that was where the gold mounted up, okay? So same thing again, when the dollar goes down, this is where the gold went up. All right, as one stage itself, right, when the dollar was coming down very fast, the gold shot up to a high of 1,008 back then. I remember this back in 2009 to 2013 back then, and was there calling for gold to go up to 1,1850, and it went all the way there. That was the highest level for gold. And of course, subsequently, with the dollars to go up, right, the gold price came down. So now the thing is this: if you believe that the dollar is going to go down because of Federal Reserve, then you're going to see a fly up on gold. But of course, during this period of time, undeniable, when the dollars have to come down, there will be some impact on the equity market. This is definitely. And if that happens itself, right, there could be a shake. And obviously, people will take profit on a profitable asset. So we've seen it before in 2009. We've seen it before in basically back then in the during the COVID period, whereby the equity market was coming down. And then what happened is that the gold price came down first initially before it rallied back, because boys dumped their gold position to save their own stock position. So take note of that, and this could happen again. So from the projection of it itself, we can see from here, taking the high back in 1978, okay, all the way projected to this high at 2014, and we extrapolate it further, so we should see 2296 by April, 2024. Okay, now the target that I calculated itself was 2218. That was 2 years ago, and the thing is that we have to adjust it accordingly. So that's why 2296 probably will be a very, very decent number. Now do note that gold has been having a very strong resistance at about 2080 mark. All right, this is a very strong resistance. So I believe that the moment the gold go past 2080, it will just shoot up all the way. So gold traders now, the price is at 1965. You don't need to hurry to buy in right now. You can just buy a little bit, maybe put some risk management, and buy slowly, bit by bit, because I think this will be very, very helpful for you especially. All right, so with that, we look at the TWB chart to wrap it up. You can see right now on my indicator, we are seeing that the boys are still a bit of selling, but we are off the lows right now. So that means that the market should be bottoming out around here, and they happen to be at the MA 200 right now. It's 1937. So it is now basically at the very important mark, 1963. That is the MA 30. Now we are actually around here. So once the market can stay above MA 30, this should propel it to higher price. The first target will be 1977. All right, that's the KCB. And the next one will be 1992. Now, near-term wise itself, I think 2016 is still my first target by this year, okay, 2016. So let's see how it goes from there. But I'm pretty sure gold will have a very good direction and movement the next few months. So guys, if you believe and you do share the same feel of what I thought about the US dollar, then of course, it's time to buy some gold. And hope you like and subscribe and share my video. Scout signing off. Take care. Have a great day. Bye-bye.